Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
It's been another interesting week in the markets and lots to talk about as we get into export data and consumer confidence and those types of things. But to start things off, let's start and take a look at the cash hog market, because it's also had an interesting week this week.
It sure has been volatile as we've gone through the week. You know, when we look at it week over week, I would say it's actually about $1.30 higher for the week. Yet again, a lot of fluctuation in between. Yet when you look at where lean hog futures for the nearby contract has been this week, it's about $2 lower. So some weakness on the future side of the equation. The pork cutout value up slightly, up 66 cents. Both hams and bellies were a little stronger this week. Bellies still now sitting here at 45% higher than where they were a year ago. So that wholesale pork side has been a reasonable week. When we look at cattle on the other side, cash fed cattle down $3 for the week. So it's a tough week for fed cattle prices as well. We saw feeder cattle prices that were 1 to 8 lower across the board. Future side on cattle have also been weak this week. The nearby live cattle futures at the CME were down about $3, while the CME feeder cattle prices were down 5. So cattle market saw another pretty tough week this week. When you look at that choice beef cutout value, it was just about break even this week, up 11 cents only, as we didn't see a lot of move in any of those components. So we still show a choice beef cutout value that sits about 9% above where we were a year ago.
And when we talk about those markets and the volatility that especially the cattle side had seen, and also on the lean hog futures side as well, it leads us perfectly into our conversation about what happened with the report for October's export data, which came out this week. And those are really great numbers to start with.
Yeah, absolutely. When you look at where we were in that October data, we have to be excited in terms of the growth that we saw. If we look in total at beef, pork, and chicken exports for October of 2017, we came in at 1.396 billion pounds of those three products. That's the highest level for October since 2011, and that's the second highest ever. So it just tells you the strength that we've been seeing there. When you look across the components there, beef exports up, 260 million pounds level in October of this year. That's 13% higher than a year ago. Pork exports up 9.5% relative to a year ago at 495 million pounds. And even chicken exports up a little over 15% at 119 million pounds higher. So across the board, that report shows us more strength in October. And you take those pork numbers in particular, it's nice to see a little bit of bounce back after we'd seen a few months where pork exports have been very near year ago levels.
But I think the big question remains, we're increasing production. And while our export totals are increasing and on the rise, so are our production totals. Are they balancing each other out, or does that make us a little bit, and maybe make the market a little bit nervous as well?
Yes, I do think we have a situation where markets are a little nervous given what's happening. When you look at the October production data that we have available to us, beef, pork, chicken production was up nearly 500 million pounds, while again, those export numbers would have totaled to be up 158 million pounds. So there's a lot of product that ended up on domestic markets. And, you know, to carry that a little further, if you look at pork production, for the week, we're at a record level ever in terms of pork production. And you look at chicken production, and last week it was the third highest ever. So we continue to have this tug of war between supply and demand, and we certainly can't just depend on exports when you look at what's been happening in terms of growth and overall meat production.
When we look at this, Scott, I know looking at hog weights this week, 1.1 at the Iowa Southern Minnesota, 1.1 pounds higher than the previous week, the highest hog weight since January of 2015. We're still seeing strength in slaughter runs too. Is it just adding that much more production that we need to find something to do with?
Well, so I guess I look at it a couple of ways. Number one, when you have $3 or in some cases less corn to feed right now, it may make some decide they want to feed a little heavier than otherwise was the case. We had frankly on the pork side done very well on weights until here recently. It might make you wonder, number two, whether or not we're kind of stringing out some hog runs right now. So whether or not we get larger runs occurring into early 2018 as we deal with that shackle space issue. You have to wonder yet. I look at the Saturday run data that we have, and it's probably still not pointing that we're too constrained, but you kind of worry whether we're backing things up a little bit right now, given those higher weights. And it is important to realize that some of the increase in slaughter, both cattle and hogs, that we saw early in 2017 was helped by lower weights, and that's all been changing of late. So we don't need to multiply the percentage increase in slaughter by even more weight, but that's what is starting to happen in these markets.
So I'm going to dovetail off of this a little bit. As we talk about export and trade, we know that those factors have to remain positive for us. We continue to have this NAFTA conversation. The latest Purdue CME Ag Economy Barometer was released this week. And before we talk about a little bit about what happened with the reading, one of the questions they asked, though, was about how producers felt about how NAFTA impacted the ag economy. And I think some of those statistics were a little surprising. While some people felt that it was a big impact, there was still a large section that was unsure about how important NAFTA was to the ag economy.
Yeah, and I hope we can continue to do some education about the importance of Mexico in particular, NAFTA agreement more generally in terms of what it means for U.S. agriculture. You know, to sit there and see, I think it was roughly 20% that was kind of sitting there middle of the road of important versus unimportant. I just remind us that ham prices in particular have been in some ways supported by the strength of trade in hams to Mexico. So it is very important. I think sometimes it just highlights that. So it's much easier when we talk about what's going on in the United States. We can understand domestic demand, we can understand production. Once you start to have to expand that beyond the borders of the United States, the conversation gets more complicated and more difficult. And I think sometimes that's then the response you get to these surveys of, well, we really don't understand NAFTA all that well, so we're just going to leave our answer in the middle of the road, if you will. And that's not what we want. We want producers to understand that these agreements matter, and you lose markets. It may not be completely devastating, but we know we've been moving a lot of product in places like Mexico, and NAFTA really does matter.
And I think the same thing goes for a U.S. less TPP or Trans-Pacific Partnership Agreement. We've had that conversation recently.
Absolutely. When you give your competitors an advantage of somewhere between 15 and 25% lower tariffs in a particular country, don't think that doesn't occur without ramifications about your ability to compete in a market like Japan. And so all those things matter a lot.
Just to wrap up, as we talk about the Ag Economy Barometer, the latest reading did show a drop of 7 points to 128. 100 is considered neutral. It's the second lowest reading for 2017. Are we maybe seeing a shift post-harvest about how the economy is looking as we look ahead to 2018?
Yeah, so I do think we might be getting just a titch of post-harvest blues now, because I think we had really good yields in many parts of better yields than we would have anticipated in many parts of the country. Now producers look up and go, what are my pricing opportunities? And there really hasn't been anything to get it excited about on the pricing side. And I'm afraid a lot of us as economists will continue to point to there's not anything on the demand side that grows all that much that pulls corn or soybean prices a lot higher. And so now we're just kind of sitting here, I think, in a lull until we start to think about what are we really planting here in the United States next year. And many of them, frankly, have to start worrying about operating loans for next year, and that's not much fun given some of the pressure that I think we've seen this year unfold.
Let's move on to a little bit of positive news. Jobs report came out today, and the economy added another nice chunk of jobs this month.
Yeah, so number one, we kept the unemployment rate at 4.1%. You know, that's still the lowest in, I believe it's about 17 years now that since we've been at that level. We added 228,000 jobs this month. I think that exceeded pre-report expectations. So a lot of good news on that job front. And I will say, you know, this is a nice add when you're producing record production of beef, pork, and chicken. We might wish for a little stronger wage rate information out of that report, as that kind of lagged relative to expectations. But it is good to see those jobs continue to grow and the economy continue to grow, hopefully equating into better domestic meat demand as well.
While we're talking about domestic demand and things that influence that or are related to that, consumer confidence came out this week, and kind of a mixed report as you take a look at those numbers.
Yeah, absolutely. So that consumer sentiment index, you know, is made up of the current situation and expectations. I'll take the positive side of that for a minute. So the current expectations were 2.1% higher in December relative to November. That's really good news. I think it just, again, tells you the current economy is getting better and the consumer sentiment's good. I think the holiday season started out really good from a sales perspective. So all of that seems quite positive when you look at the effect on the overall consumer sentiment index. However, it's also made up of an expectations component that was off 4.8% in December relative to November. I think a little bit of that expectations uncertainty probably hinges on tax reform that's going on in Congress right now. I think a lot of consumers in this country are unsure what that really means for them at the end of the day. They're hearing from both sides of the aisle in terms of the pluses and minuses of potential tax reform. So I think that might have had a little bit to do with the slowdown. The overall index then was down 1.7% as that expectations index weighed a little heavy relative to the upside on the current situation.
And to wrap things up today, farrow to finish returns came out from Iowa State University, and it looks like another decline, month to month at least.
Yeah, so if you look at the November data, Iowa State numbers would have suggested November lost $1.38 per hog. That's very close to where we were in October. But again, I will at least for a minute remind us we would have been much more negative about this early in 2017 in terms of what was going to be happening. And so, yes, it's been some red ink, but maybe not as severe as we might have thought. If you look at the year to date, however, we're still talking about roughly a little more than $13 per hog of profit in 2017. And if we were to stay there, that's probably the second most profitable year since 2006. So I still think we're going to look back at 2017 from a hog market perspective and say it was pretty good despite what's last couple months been a little bit of negative. Thank goodness corn prices continue to stay low. I think that's been very helpful to the hog industry.
That being said, does that potentially set us up for additional growth again in 2018?
Yeah, Megan, I don't think we're done growing. I think we're going to continue to push higher hog pork production into 2018. I don't think we've really done anything to turn the spigot off in terms of what producers plan to do, and especially when you think about the additional processing capacity continuing to come on, there's going to be some push to fill that capacity as well. So I think we're likely headed for more hogs, just as we're headed for more cattle production as well next year. So we know the direction of those things. Now it's just what continues to happen to demand, I think, that's really important as we think about 2018.
Well, that gives us plenty to talk about as we head into the new year.
Absolutely.
Scott, that's it for this week. As we look ahead to next week, any reports we're keeping an eye out on?
Most important, so next week we will get USDA's December monthly report, WASDE, coming out on Tuesday. We'll also get a little more shot of retail prices on Wednesday of next week, so we can see what consumers actually are paying for some of these meat products as well, yet again.
Scott, have a great weekend. We'll talk to you next Friday.
Very good. You do the same, Megan.
Thank you. To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.